Hey, this is Matt from InvestingQuant. Today is Friday, April 3rd, 2020. And we're coming into the closing portion of the session this afternoon, and I wanted to look at a pattern based on the price action that we have been seeing all day here. We've been selling off after the initial push higher through yesterday's highs. Since then, it has been selling off, and we are trading down in the bottom portion of the range. So I've got a chart here that I've set up with a retracement tool on it so that you can see what I'm looking at here. And the pattern I'm going to be looking at is based off of gapping down at the open and trading in the bottom quarter of its range going into 3 p.m. Eastern time. So the bottom quarter of its range is currently under 24.6937. Now this is being recorded around 2:30, so I don't know where we're going to be at that time when it comes to 3 p.m. But if we're still trading under that number, and if we haven't changed the range, we haven't traded further down to expand the range, then that would be the area we're looking at. So the bottom quarter of today's trading range. So let me set up this pattern that we're going to look at based off of going long at 3 p.m. Eastern time when we are trading in the bottom quarter of the daily range. And I'm going to set this up as a down gap. Come in here to this post-open filter section, and that's where I can put that we are trading in the bottom quarter of the range at 3 p.m. Indicators, I'm going to put this above the 10-day. We closed above the 10-day moving average yesterday, but below the 200-day moving average, and view results. And these are the results for going long at 3 p.m. Eastern time when the ES gapped down at the open and then pushed lower to trade in the bottom quarter of its range at 3 p.m. Eastern time when above a 10-day moving average and below a 200-day moving average. So we've got 66 samples here based on this intraday price action pattern, and of those we've got about a 45% win rate. And noticeably weak there during the 2008 period. So the equity curve's kind of messy, but almost straight down during 2008. Since then, a little bounce and then continuing lower again. So this is based off of going long. So maybe the short bias a little bit better there. Maybe you want to be careful trying to pick a bottom going into the close. So good luck, guys, and we'll see you next week.